Good morning. This is the market update for buy sell short for Sunday, May 20th. Another day, more red in the market. Facebook IPO Friday, considered a dud for the most part, closed up 23 cents on the day. Everyone expecting, and I actually thought we would see 50 plus, even if it was just on the open. Just an absolute dud. Although you can argue that they priced the IPO perfectly. The company maximized its money, but left no real money on the table for the retail buyer. Not really a surprise, given that if you had any sort of money, you could buy Facebook on the secondary market over the last year plus. So not really a surprise. Everyone was sort of looking to the Facebook IPO to put some juice back into this market, but with all this Greece European nonsense still out there, the level of fear is extremely high. Looking at the 15-minute chart, since that head and shoulders breakdown we had 16 days ago, we have essentially gone straight down with no bounce to talk about. Pretty rare to see such an extended drop. I mean, we're almost down 1,000 points now over the last 16 days and getting really, really oversold. Thing though is that we have to keep in mind, just like overbought markets can continue to be overbought markets, oversold markets can continue to be oversold. But we're starting to see really a lot of negativity out there. If we look at the Dow daily chart, let's scroll down here a little bit. You know, we trade based off charts and off trends and what we see on the charts. And right now we're going to take a peek at the MACD. This is this section right here. And you can see I've drawn this little downtrend. You can see the MACD, every time we get to this line, even though it's a lower low, we get a nice little bounce. The first time we had this happen on this trend was back in the March timeframe. We had done, which at that time was a big sell-off, we dropped 300 points. Then we ended up getting a 600-point rally. Second time we had it, we had a 600-point drop. Then we ended up having a 600-point rally. Now here we stand, we are down 1,000 points, and we're right at that line again, another lower high. So if we were to go off this trend and looking where the chart indicators are we going to get another 600-point bounce? If we look at the chart here, 20-day exponential right now is at the 12,800 level. Whoa, look at that, 600 points higher. If we also run a 50% Fibonacci retracement from that high and assume Friday was the low, we get a bounce up to that 12,700, 12,800 level. RSI is deeply oversold. ADX is through the roof. We also have stochastics in the basement and very, very oversold. One thing I mentioned in the chat room on Friday as well, the put-call ratio. Now, this did have a big dip on after they did the recalculations on Friday, but we were hitting 145. This is multi-month, multi-year highs. When we get up to the 145, 150 level, typically marks a near-term top in bearishness, and we usually see a bounce back, unless things really melt down like we saw last summer where it ended up spiking up to the 170 plus area. But this, over the years, has been a pretty good barometer for at least some sort of bounce in the market, and we are way overdue for a bounce in this market. As such, you know, late Friday, our options guru Snow was talking about the SPY August 140 calls. So those are what we're looking to nibble. We picked up a few on Friday and may add to that position on Monday. But this is a tiny, tiny, small gamble position. So we have some skin in the game if indeed we do get a bounce back. Now, one thing we do need to keep in mind, we're looking here at a one-year chart on the Dow, and so far we've hit all the downside support levels. Next up is the 200-day moving average down there at 12,200. This 12,200 to 12,300 level where we closed on Friday was an area of strong resistance back in the fall. From really October through December, this was a strong resistance level until we were finally able to break out in late December. So given that the 200-day moving average is here, and this acted as a strong resistance level back then, it should quotation marks, act as a decent support level here, especially with RSI under the 30 level, which, the last time that happened was during the debt crisis back in the summer. And we've got some nice trends in place. Stochastics nicely oversold. Odds are decent. We should see a bounce this week. If we do not see a bounce at this 200-day moving average, our next support level will be that 11,700 level. I don't think 12K will really offer much of a support if we fail at the 12,200 level. So while we'll get a little bit of skin in the game, still not time to really jump into stocks. Russell 2K closed under its 200-day moving average on Friday. Let's see if we get a snapback on this one. This index is deeply oversold as well. If we look at the SMH, very tight, bullish falling wedge and closed under its 200-day moving average as well on Friday. Russell and SMH have been sort of leading indicators for the Dow. So if we were to assume that's the case, perhaps we're going to see a dip on Monday under 200 to mark a bottom to scare everyone in. I'd probably add a couple more positions on a test of that and see what happens. Again, very, very small. We're sort of testing the waters. For most traders, staying all cash is probably the wisest thing to do right now. As for the VIX, you recall last week I had a discussion about the VIX and what our outlook is, and still keeping that outlook in place that this summer may end up being tough and we could see a decent size sell-off. But before that, we're likely to see a rebound. On the daily chart, we're getting up there to resistance at the 200-day moving average. So this also supports my thinking that we're going to see some sort of snapback in the market this week. It may just be a temporary snapback before we get another spike in the VIX. I mean, a great thing to see this summer would be a spike up to that 45.50 level and finally set the stage for some sort of decent rally in the market. Looking at the SPY, as you can see, steep bullish falling wedge here. 20-day exponential is at 135 or 1350. And again, just like most stocks, S&P likes to bounce back. And this sell-off we had over the last couple of days was on very, very high volume. So those that wanted to sell are getting out right now. Going into this week, of course, the European issue is going to dominate. We had the G8 meeting this weekend. It's going to be interesting to see how it's spun. There was a lot of solidarity, no real surprise. It's not like they're going to argue about keeping Greece in the euro. The big worry last week was that Greece would dump out, and that could cause some real near-term issues, but it'll probably be good long-term. We also had news that Germany has increased the pay in the country 4%. So we could see the German markets up tomorrow and that cascade across the European markets and possibly give us a positive bias in the morning. I mean, I would not be surprised to see them try and gap this market 100 points. Neither would I be surprised to see them gap it down 100 points. There's equal risk at this stage of the market for both long and shorts, which is why if you are going to tiptoe in, you tiptoe in. I mean, we've played many big market sell-offs over the last decade, and this is how we go in. We start with a few small calls for a possible bounce, and then as the large caps start to rally, we've got some skin in the game, and then we look to pick up some broken, beaten down stocks. If the sell-off continues, we played some calls, we lost a little bit of money, but our exposure is really, really tiny, and then we step to the sidelines. And that's, essentially how I've approached every sell-off really over the last 10 years. Oil prices, you can see that head and shoulder breakdown. 80s are not too far away, although, if you live in California, gas prices are still sky high, which sort of defeats the, idiotic argument that the more you drill, the lower gas prices go. Absolutely bull. If this year has taught us anything, it's that theory is crapola. All they do here in California, if or oil prices go down, they shut down a refinery and jack up gas prices here. So, we can drill all we want, and we have been drilling all we want in the States, and it's really, we've got gasoline prices at multi-year highs almost here. But anyway, head and shoulders breakdown, it would need to bounce back over 98, and, we could see that happen. We could see a retest of the neckline breakdown on a bounce back in the overall market. This is the week we'll probably see that happen, if it's going to happen. Quick mention on the pop scan, if you'll notice, Not a whole lot of stocks on it, but there's a couple of lines spaced with no stocks and then stocks underneath it. Those are short consideration stocks. Started adding, or I've been working on some scans lately for us to pick up some stocks breaking down. It's been some nice small winners lately. A lot of risk to shorting right now, so if you are shorting, keep your stops tight. But I'm going to start putting some short consideration plays in the pop scan. I guess we could call them pooper scan plays, stocks that are looking to break down. Scans, really, even the bearish scans that I've been running are not giving a whole lot of good plays, which, you would go, hey, the market's selling off. Why wouldn't there be a lot of short setups? And the reason being simply is they're down a lot right now, and the risk reward, even on a lot of shorts right now, is minimal, with a potential for, big gap ups very, very possible over the coming days. So that's it for the market update. High/all cash stance nightly is the way to be right now. There's not a whole lot of momentum out there. If we were to look out a little bit, it might be in the biotech stocks, but even that momentum has not been there, which is pretty rare going into ASCO in a couple of weeks. The Facebook plays fizzled and crashed on Friday, but no surprise as we dumped them all after the gap open. There's a rule of thumb. IPO sympathy plays, you sell the day of the IPO before the IPO comes out. And the Facebook IPO and how these stocks, let's look at the Facebook stocks and how they reacted on Friday. We had Zynga, which ended up having 2 or 3 flash crashes on Friday. Down huge. QPSA, this is one we gapped on Thursday. We got a nice gap on Friday. We exited 430 to 440. That ended up dropping $1 plus. You go look at REN, REN, Splat. For the majority of traders, high cash, all cash is the way to be. Trade whatever action there is intraday. To give you an idea of what crap is still moving, this is a stock I called in the chat room on Friday. The way it was setting up, it was at 430. I said, watch for a $5 break. 550 will be the target. And the stock just went kaboom. Even with the market down, this is the kind of low flow crap that traders want to chase right now. Not as much as before, but still an issue in the market. What we want to start seeing traders doing is chasing bottom bouncers plays. But in order for that to happen, we need to see a nice little bounce in this market. And again, look, 200-day moving average on the 15-minute is that 12,700 level. So I would be pretty surprised if we don't see a decent-sized bounce back in this market this week. But are we betting big ahead of that bounce? Hell no. I want to see it start to bounce, start to see some stocks react. We've got some skin in the game with some SPI calls. And actually what might be another nice mover this week, Google, back to its 200-day moving average. This stock could easily see a 20-point pop in 2 days, especially off this 200-day moving average. I know Snow likes the options in these ones as well. So these are the kind of plays that are going to bounce back probably first. Apple is another one that they like. Possible bottom on this one here. All bounce targets back to their 20-day exponentials. So that's it for the video. Any questions? Shoot me an email, feedback, buysellshort.com or .net. And I'll see you guys in chat room tomorrow. Bye.